Hello, everybody. How's everyone doing? Shakespeare hit us with a curse. May you live in interesting times. Wouldn't mind going back to more boring times. How about you guys? Hi, Brock, Glenn. All right, so let's talk about money. Gold, I believe, is going to make a move up towards 1600, maybe even 1620, which would be, look at all this confluence up here. That
We
maybe
can't see
this,
your screen, coach.
Yeah.
oh, huh, I didn't resume it. Okay, thank you guys. So had this initial launch yesterday, nice pullback, very possible that we're going to get some follow through up towards 1600. That 1620 would be about 61.8 back. So this is where I think we're going. And if you're a bear, that's going to be a shorting opportunity. But, there still could be 80 bucks to the upside here. I wouldn't get short gold until we got back to this level. And I think really one of the most troubling things, and Michelle Schneider talked about it, is what's happening with yields. You look at the 10-year, right? And I mean, all the emergency measures and everything the Fed's doing. This is an emergency, guys. Okay. Oh gosh, Sean has St. Patrick's Day jokes. I don't know, Sean. Go hit me with the punchline. Anyway, the dollar back at new highs. Euro still holding up the best out of all of them, exemplified by euro pound. What a move in euro pound. And I'll admit that back here I tried to fade it, even tried to fade it last night. We're diverging, but over 70. And I thought this would happen with the dollar going down, not the dollar going up. So, surprise, Dale. The fact that the yen is down 34. Look at how great the yen is looking. This was kind of the tell. We only had one, we had a little shallow pullback, and last week when we took out 104 and a half, and then we're closing back above it. If the yen got back to 104 and a half, it's most likely a good buy. But look at what happened to TLT yesterday, and I think the bond top was the most surprising, that when we were here a couple of weeks ago at 180 and TLT, of course, it looked like a blow off, and we could have a little normal correction. But this, you tell me. I mean, I showed that weekly chart last week, and wow, there's really been nowhere to hide except the dollar. So I mean, this is what all the bears talked about for a few years, that the dollar would be the safe haven. And we've talked about liquidity crises here for a while. I had training in it when rates went to 20. Um, Under Volcker, we had liquidity crises. In the financial crisis, we did, but this is really one of the worst. And this is a pretty violent move in treasuries here. And this is supposed to be the safe haven. Okay, so if this is the safe haven and this is a safe haven, what's safe? Okay, so looking at things to trade here today, I've decided I'm not going to be taking home positions anymore. I guess this is going to turn me into kind of a day trader, because the overnight action, you could go to bed here in the U.S. So yeah, so um, and have just a stable thing. Looks like most of the big moves are. I'm not sure if they're happening in Asia and Europe, but Um, they're happening before we start here in the US. That's something I've noticed. So here's oil at new lows. You would think that we're starting to get close, but here's the key to everything, and everything's binary. And until we get some type of bear market rally, at least in the S&Ps, uh, things are going to continue linear, just like they are. And this let me look at it. This third drive in S&Ps. Looks like it's gonna come in under 2,300. Just a ballpark on the line. Looks like right around 2290 if it happens soon. So one more low, and if the RSI, look how long we've been diverging, going all the way back here. But I'll tell you something about divergences that you really have to be patient and have a few of them, because when you have momentum moving in this way, you could have a lot of failed divergence signals. How do I know? I've had, quite a few in the last few weeks since the initial break. So, after being right about the top in the S&Ps, it's become a little difficult for me. I don't know about you guys, but it's become a little bit more difficult for me. There are people that thrive in it, and you know where they are? They're right here, and they're right in the chat room all day long. So I believe that there's going to be an announcement for. We want to get you guys involved with good traders every day. Surround yourself with people better than you, traders better than you, and you'll rise to that level. So I think there's going to be a promo. There's rumors that there's going to be a promo. So um, get your wallets out. And with that being said, I want to know how the pros in our company are handling this move, kind of one-way street moves. And right now, just turn it over to my colleague and friend Blake
Hey,
and see what he thinks, man. How are you?
I'm all right. I'm hanging in there. Yesterday I did actually get run over though. I was trying to buy the Aussie
Yeah, I
and
tried it too.
yeah, I tried to buy, I can't remember exactly
It
where.
was only a day. You got 40 pips, and the Kiwi was a little stronger. But God, I mean, fading markets right now has been. I've had a couple of difficult weeks trying to fade markets, Blake.
Yeah, you
I'll be
can't you
honest.
can't fade these moves right now. I mean, we're seeing let's talk first of all, let's talk about the cable. So, the cable's breaking these lows and I
Wow.
told the guys in the chat room, look, I'll buy it around 116 right down here, the 127% extension of this move. Now, will we get there? I don't know, but I'm willing to buy there. So does that make sense? Yeah, so I
Yeah.
don't know if we're going to get there, but I'm willing to be a buyer down there if we get there. Um, but you look at like the dollar index, and the dollar index is just it's screaming. I mean, we're almost at 100. It looks like we're going higher. I mean, this is obviously a very big dollar funding issue with the markets, and you know, I mean, I'm gonna bring in Stelios and Steve to talk a little bit about this here in a moment. But you got to talk about a little bit bigger picture things before as you're trying to trade around and navigate these markets. I mean, we are we're going to be slowing down to like uh, negative. I mean, Deutsche Bank's looking at negative 10% GDP. And guys, you have all this debt out there that's yielding nothing, and you have bankrupt countries. Who's going to pay these debts globally? You know,
That's easy.
and
The printing press.
More debt. Yeah.
The printing press.
yeah, I mean, but when does the system collapse?
It
Unless
Uh,
it's
is. It
we're
currently
is.
not far.
collapsing.
We're not obviously far away from that.
Yeah, I mean, so I mean, what's the action here? I guess is, but maybe the better question is, what do you do? Does the dollar continue to rise? I mean, I think near term it does because of these, you know, stresses that we're seeing in the system. So obviously, everybody wants to own dollars right now, but for how long? you know and when does the system collapse, and what happens when it collapses? It's crazy to think about, but you think about like what to do in these situations, and my I don't have a good guesstimate other than you know keeping your powder dry and waiting for these moves to show their hands, if you will. And it's like, because I just don't know. I don't know what the right answer is. What do you guys think here?
I personally think we're seeing, I've said this before, we're seeing similar picture to what we saw in terms of 2008. In terms of price action, the underlying cause is very different this time around, but we're seeing the same thing. Lots of demand of dollars, trying to sell anything that's liquid. And I think this will persist a little bit more. I think equities have some way to go. The question that you said, when does this system collapse? I'm not sure, actually, because we know that they can do more and more and more of everything till they do more. So is there going to be a big reset that people are talking about, the huge collapse? I'm not sure about that. I think they're just going to print and do more fiscal stimulus and monetary stimulus until
Stelio,
there
I'm
is
not so
enough
sure
money out there.
the market is really convinced that, yeah, they're going to be doing more and they're going to be inventing more tools. There's no question about it in my mind. But have you seen bonds? The bond market isn't buying that anymore.
Yes, I'm short bonds,
Yeah.
remember?
That's part of it.
Yeah, I know.
That's part of it.
It
Yeah,
was a
that's part of the
rhetorical
equation.
question.
I mean, yeah, and I've always warned here that when bonds collapse, you got to be a little careful, right?
Yeah,
I mean,
the question, we need to put it into context. If we have 10-year US at 1% now, whatever it is, if it goes to 3 or 4%, it's still, historically speaking, not a disaster. They're gonna, obviously the US is gonna have trouble funding the interest payments on these, but they're just gonna print more and borrow more and do it that way. The big problem is gonna become if we get to double digits. That's the issue. That's where we're gonna have a problem.
But Stelio, if the market believes that that rates are going to go out of the hand of the Fed, and we do go to 3%, there is absolutely no stopping until we get to double digits. Because as you know, then it's a vicious circle. I mean,
yeah, you're right.
Yeah, you understand what I mean? Once the market stops believing that they can actually contain them, they are going to find their actual value, and their actual value is much higher.
I'll just say one thing to you. Japan, they're just going to start buying everything. If people don't want the bonds, they're going to start monetizing everything. So they will keep control of the yield curve. If they want to, they can do that. That's my only problem.
I totally agree with you, Stelio, but there is one big difference between the US and Japan. Japan is
who holds the debt. Yeah.
First of all, you're right. You're right. There are two big differences.
They're
one,
the bank.
Who holds the debt? And two, Japan actually has a very strong economy, meaning not that 75% is like consumption. They are actually producing a lot of things that people all over the world want to buy. So bottom line, Japan is not in danger because they have actual economic growth, which is production. Now, when faith in the dollar gets, starts going away, how will the US rebalance, having built an economic system that they actually print money and use paper to import actual goods that have been built by actual use of factors of production, labor.
You have to remember, though, the US is a huge, they produce services, right? And tech and all that. Look at all the big companies in the world, like, Facebook and Amazon and, FANG, basically.
Absolutely.
So
but other than that,
stuff. I agree.
Other than that,
but it's not that they're not producing anything, obviously. But I
no,
agree.
It's not that they're not. But I mean, they used to be the #1 productive nation on the world and the #1 creditor on the planet, and now they're the biggest
Steve,
debtor on the planet.
I'm with you. I agree with you on the principle. I just think the extent might be not as critical as we might think. They might. And they will, I think, eventually contain whatever damage it is. They can't.
From experience, usually the pendulum doesn't get to reset in the middle after being on one side for so long.
Yeah, I agree.
Because it builds up dynamic energy, the dynamic energy becomes kinetic energy, and then when it passes through the middle, then it has to go crashing the other side. So, that's what I'm afraid in this case.
Well, I think there's one thing we can all agree on, that yields like in the 10-year going from 0.30 tripling to back over 1% is not because of
While
because
stimulating.
of economic strength.
Of
Oh,
course
absolutely.
not. Of course not.
Absolutely.
So, yeah.
So with all this conversation, and I'm just like looking at some of these pairs. You got like the dollar Canadian that's just, I mean, it's on fire. The Aussie dollar is hitting multi-decade lows. I mean, we're seeing levels we haven't seen since 2003. What is the asset class to own? And the only thing that comes to my mind at this point in time is gold.
Gold. I'm 100% with you.
I agree.
I mean, you own gold because that is when the poop hits the fan. What is the asset class that you got to own that that there's only a limited supply of? You got all this money. One of the things I've been kind of pounding on the table for the last couple of days regarding gold is you have this massive influx of money coming into the system, right? And what like what's your protection against that? When there's just massive amounts of liquidity, especially if we're going to have an inflationary event, which I'm assuming we're going to, right?
In my mind, there is no question about it. The only question is when, not if.
Right. So we're gonna, let's say we put, we do some sort of basic income here in the United States, which is entirely possible. You know what I mean? I mean, I guess Donald Trump is talking to Yang, who had floated the idea during the Democratic nomination. And I mean, what if that actually happens? There's going to be massive amounts of inflation everywhere. So what's your protection? And I look at gold and I'm like, man, it's like you got to own gold. I think.
I agree.
Unless they flush everyone out of that before the inflation cycle happens too.
Let me say it otherwise. I think it's irresponsible not to have some gold. I mean, we can debate if you should have a big part of your wealth being in gold, a small part of your wealth being in gold, but I think it's irresponsible not having a part of your wealth being in gold.
Right. Okay. So I guess maybe the other question is, you take some of these commodity currencies, whether it's, the Aussie dollar or the Kiwi dollar or, the Canadian dollar, the peso. Are those currencies that you actually want to own in this environment? I know it's like everybody thinks of these commodity currencies as more of growth currencies, which obviously we're not going to have any growth for a while, but do those become the currencies of choice, in this environment? I mean, I don't, and it's obviously not at this moment. I'm just kind of talking theoretical right now. You know what I mean?
I personally think that we're getting to levels that we're not going to see for years and years in these commodity currencies. So when this momentum stops, it's very difficult to go against this flow. But when it stops, I think that's where you should be. My humble opinion.
Yeah. Well, it's a crazy market we live in, and Dale, you were just you were saying, I want to go back to the way things were in the slow market, which is it's funny, but it's not funny because we wanted all this volatility. Well, we got it in spades. And now the question is, what do you do with it, and what do you do with this, with what we're seeing here? And it is hard. These are hard decisions, and it's a hard market to trade at this moment, and you have to be really, really careful with what you're doing out there. I look at the dollar Mexican peso. I mean, we're up 4.5% right now. You look at the US dollar Canadian, we're at highs and we're up 1.3%. US dollar Norwegian krona, Swedish krona, the cable's down 1.5% and going. you know, it's these are really, hard times to be, trading the markets, and you know, you kind of have to, almost have to, you know, take a stand in your positions and keep them really small, and go with your gut instinct and know where you're wrong, because and just get out wherever that might be, because right now the markets are just wildly moving all over the place, and
Blake,
you're gonna get
USD
stopped here and there. What's that?
USD MXN is 30% higher in 19 trading days, and the
Yeah.
daily RSI is almost at 95. Outside of events like the Swiss franc, you remember, with
Yep.
imposing
Yep.
the floor, letting the floor go away. The USD yen, when it exploded from like 70, what was it, 77, 78 higher, I don't ever remember seeing a currency pair having that kind of a trajectory. It reminds me of a bubble stock during the mania phase.
Yeah, yeah. I mean, it's nuts. I mean, look, the dollar Canadian just took out 144. We're at the 88% retracement. Now, when I say 88% retracement, that is of the, January 2016 highs to the lows. I mean, this was our chart of the day yesterday, and I thought we'd, probably find some sort of resistance around 143. Here we are, a lot higher. So, very, very wild moves out there, guys, and you have to just be very careful in this environment. You just have to, because they're it's nonstop movements. But yeah, you pointed out, Steve, correctly, the RSI for I mean, I don't know if we have a 91 back here in December 2014. I mean, obviously,
might be an all-time record.
it could be. Well, no. Well, let's
oh yeah,
see.
we have that back then.
In 2008, that was let me mark
Similar.
that up. I think we're higher than that right now. So let's just roughly. Yeah, we're higher than that right now.
Yeah, probably an all-time high in daily RSI.
Yeah, yeah. So it is probably an all-time high. If you go back historically, it probably is. So I mean, are we a little stretched right now? Yeah, probably. What do you do with it? I don't know.
Yeah, when a market goes nuts, it can go even more nuts, right?
Pete said, wanted to step in and just say, if you were flat or simply decided to watch the shenanigans and fireworks the last couple of weeks, you're a winner. People getting shredded out there. For someone doing this for a long time, it's great. It's a great time to clean the garage or get the bathroom painted and repaint it and come out with your capital secure. Very well said. I mean, these are the times where you really have to, be careful. If you're gonna dabble, make it really small. Go rearrange your sock drawer, paint the garage. So it's just, it is really, really, really crazy out there. And the thing is wow, look at the cable. Oh my.
Yeah, the cable is drilling for oil. I mean, nonstop.
I mean, it is just getting absolutely demolished right now.
From 131.20 to below 120 without a breather.
I mean, Chi in our chat room, he was just shorting it at 119.30. I think he moved his stop up to break even, or stop down to break even. Good trade, Chi. It's crazy. So, but be careful. Actually, you look at like the dollar Canadian, it's pulling back a little bit from 144. Dollar Mexican peso is just kind of stalling at the highs. Yeah, so I was also I got word from the guys in our office. They were talking to some of the trade desks out in Australia yesterday, and they're like, liquidity is an issue. We're just buying dollars any dip we can. Any dip we can find liquidity, we're buying it, and that was yesterday. So, that's what we're seeing, guys. We're seeing those types of lack of liquidity. Got to buy it now. Just remember, as quickly as the dollar ran up, it can actually go the other direction too. As funding pressures come off, whenever that might be, the moves that you're seeing can obviously reverse at some point. So just keep that in mind. So hey, Steve, we have a special, right? Is that live now?
No, it's going to be tomorrow morning. We
Okay,
need
so
to iron out a few details, but we can talk about it.
okay, so tomorrow morning, guys, just Forex Analytics, it's a, how should I say it? I mean, I know I've said it to you guys before. It's a safe place to land for traders, and the whole reason why I built it in the first place with Steve and Stelios is because, and put together this wonderful team, is we just wanted a nice place for a lot of the traders that were with me when I was back at Ally Financial. That we wanted a place for them to go when I left, and so we have, obviously the platform itself, which is a great tool because of the technology behind it, and having the app, and being, getting notified when there's new analysis, or when these support and resistance levels are breached, things like that. But having a chat room where you can be in a community with other traders like this, where you can see us just talking, and sharing charts, and on things that we're discussing, just having that type of ability, having that type of ability, just having a community like this, it's worth it. So you're not trading at home on your own. And so, guys, this is the, come join us in the Forex Analytics community, and we're offering a pretty steep discount so you guys can be involved. I mean, these are tough times for everybody. So we want to, make sure that if we can help you get in, then we're going to do so. So Steve, we could talk about it more extensively tomorrow, but if you guys are on the fence, tomorrow is going to be the day, because it'll be
Yeah, absolutely. Tomorrow
price.
early European hours.
Yep.
Offer
All
is going to
right.
be live.
So guys, I'm going to pass it over to you. Good luck today. And I'm going to take the words from Pete. This is a good time to just be safe, be on the sidelines, don't overexpose yourself. This is a good time to do that. So, all right.
Definitely adjust your position sizes according to volatility. I mean, that's A to Z.
Yeah, triple them, right?
Yeah.
Right.
I mean, you want to keep trading, that's great, because we also keep trading. We consider this to be a time of opportunity as well in trading, but adjust your risk accordingly, because these are not the same conditions we had during the past few years.
Right. Okay, guys, I'm going to pass it over to you. Thanks, everyone.
Thank you.
Good luck today, Blake.
Yeah, good
luck.
hunting, Blake.
Bye-bye.
We have some numbers, although they don't mean that much, coming up. Steve, take a guess. What do you think, and Dale, what do you think the average move of the S&P has been over the past 7 sessions? The absolute
The whole
move. Okay,
range,
no, the
or just
daily
how
move.
much? Oh,
the daily move.
5%, 4.5%, 5%.
That's a good guess. 7.7.
Wow.
That's crazy, right? So
Yeah.
as long as you're seeing volatility like this, you're not even near a turning point. That's what my experience tells me. So it's the whole thing is definitely going on and continuing. I've said it yesterday, the day before. I think any decent bounce in equities is a selling opportunity still. They're throwing the kitchen sink at it. They're doing everything they can. Well, they placed, what was it, a trillion, 1.5 trillion, whatever it is. I think more is needed. The market's still not convinced. Look at the reaction from yesterday. So we're going to be opening limit down.
I'm very curious to see how much housing starts are going to plunge, not in this reading, because starting a house is a decision that once you make, it's not easy to reverse at the first signs of trouble. So I don't expect today's data to be that bad. They might not even not affected at all. But I believe that
Let's
these
see.
type of indicators, like housing starts in 2-3 months from now, are going to be horrible.
How about
Yeah.
real estate as an asset class? Do you think that there's going to be some type of price adjustment to the downside? Here in the U.S., a lot of areas have recovered and taken out the highs of prices from the crisis in 2008. Do you think that, people aren't going to be moving around as much, are going to be hunkering down? Part of the bullish argument here in the U.S. is that there's really a housing shortage because the builder, I don't know where all the homes went. I really do know where all the homes went. Hedge funds bought them all up after we went into a mass foreclosure crisis here, and they're renting them to the people that used to own them. So the reason there might be a housing shortage is because it turned into a financial instrument. They went out and bought 1,000 homes and turned it into a yielding product. But do you think that this is going to affect real estate prices in the US and globally, Steve?
Well,
Normally it should, to begin with. Normally it should, and it should by a lot. And let's hope it does. Because I remind you, as you indirectly said, that housing prices have recently, when I say recently, I don't mean this year, I mean like during the past, several years.
Yeah.
During the past, let's say 20 years, roughly.
Well, they
they've
took a
been
big hit here in
They
2009.
did.
Yeah.
They did a much smaller one than they should if they let the market properly rebalance. If I want to be more accurate about it.
But all the
But
supply was taken off the market by, hedge funds saw it as a great opportunity to buy a 60% discount on real estate and then rent them out to the public.
Yeah, in general, it's a very rotten situation because correctly, people lost houses because they ended up trying to bid houses that they could never afford. Of course, the big problem was that the government, once again, managed to persuade people that couldn't afford to actually go for houses and let the banks make them believe that there is an asset class that is a one-way street and there is only money to be made by owning it. So people were lying about their income, they were lying about their possessions to be
liar
able to
loans.
get liar loans. I mean, only the concept that in the US, and that shows the huge problems with the system. Only
How
the
corrupt
concept
it
that
was.
that they would let you put on a piece of paper whatever you wanted and then pay a penalty for not letting them verify that you were honest about it, tells you everything you need to know. Because
there was collusion there too, Steve.
Basic question.
Appraisers would come in and say,
Indeed.
what do you need me to bring this house in at?
Exactly.
So they could sell it. So the question is, are prices going to suffer now?
I think yes. I think they will try to keep them elevated, of course. And as you saw in the 700 billion of quantitative easing they announced, and it's not by accident because they wanted to front run that, they allocated 500 billion of those for treasuries, for bonds, and 200 of those for mortgage-backed securities. So they want to, to try to catch it before it becomes too much of an issue. Now, do I believe they're going to succeed? Partially, they will definitely do. I mean, they will definitely manage to slow down the fall. Now, do I believe that they're going to be completely successful and house prices are not going to be affected? No, I don't think that's likely. What do you think, Stelios?
Sorry, I was off for a minute. What was the question?
What do you think is going to happen with house prices?
House prices. I think what Dale described is absolutely true. But the thing is, the US in particular, it's vast, right? You have shortage in New York, San Francisco, LA, Chicago. You have in these in these areas where everybody wants to live because of working there, just like London. But overall, I think those places are going to be difficult to see big drops. I don't think you're going to see much. Just in the same way as you didn't see any drop in London prices, any noticeable drop in London prices in 2008. I was there, and it was marginal. So I think those places it's going to be difficult to see any meaningful drops. But overall, yes, the housing market it theoretically should have an effect, but I don't think it's going to be massive.
It's the most illiquid investment on the planet.
You know what? My friends ask me, what do you think we should be owning going forward? And I say land.
Land.
Pick
They can't
nice
print land.
Yeah. and
Land
also-
because it doesn't also have costs.
Yeah, exactly.
to own
Maintenance costs. Yeah,
just
or
land, yeah.
taxes. Taxation. I think in land is I know in Greece this way. It's much less than owning a building.
In
a
Greece,
house.
it's much less, and I think in some countries there isn't even taxation for land
Yeah,
without buildings on it.
Yeah.
Still,
All right,
Anyway.
enough of that, huh?
So as I assumed, the US housing starts were not affected, but look at build permits, which is a leading indicator, right? Minus 5.5. So I do think that we're going to see housing starts getting affected from the next month, and probably it's going to be a little bit slower because, as I said, the decision to build a house is not like a decision you take lightly, and it's not a decision you're going to cancel, in the first sign of trouble. So I think that housing starts might even bottom later than other indicators do.
And the other thing to remember, compared to 2008, where were rates and 10-year, 20-year, or 30-year mortgages in 2008? Where are they now? Everybody's refinanced to really low rates. So yes, there's going to be trouble with income, with funding, maybe, but it's not going to be as big as back then.
Unfortunately, Stelio, though, from the last time I had a look at these statistics, and it hasn't been recently, but I don't think that these statistics change, in a fast pace. There is still, a reality that people pay for their mortgage a much bigger percentage of their income than they used to pay in the past. So if this recession, as most recessions, as all recessions, lead to unemployment exploding higher, what about people that actually lose their income completely? So, no matter how low the rate on your mortgage is, if you can't even afford the principal without a job, that's an issue. And I'm afraid that there's going to be more than a few people that will have this type of a problem. Now, in the joke of the week, Mnuchin, actually, Stelio, I don't know if you heard it, believes, and this guy is actually the Secretary of the Treasury.
Secretary, yeah.
Yeah, he said that he believes, what was it, 2 days ago, that the US is going to avoid a recession.
Well, because they're going to send everyone $1,000. He thinks that's
Dale, even if they send everybody 10 grand.
I knew you were going to say that.
Yeah, even if they send everybody 10 grand,
yeah.
With this type of event that we have now, the US wouldn't avoid a recession even if it had a healthy economy. Imagine with the type of economy it has, and it's not the exception, of course. I think we're going to have a very deep recession, no matter what the Fed does. They can smoothen it, but it's still going to be a recession. I mean, how can you be the Secretary of the Treasury and not be honest about that? Because it's not that it's something that you can hide.
Oh, he got a lot of training at Goldman Sachs.
Yeah, whatever. Speaking
That's
of
how he
Goldman
was able
Sachs,
to do it. Yeah.
speaking of Goldman Sachs,
Yeah,
Goldman Sachs target for the S&P is now 2,000. By the way,
Yeah.
just worth.
They
worth
were
noting.
well. Lloyd Blankfein dropped into face last week. Saw our charts.
And I've seen now the most revised targets from several of banks, big institutions, etc. And I've even seen assumptions. I've seen 1.6, 1.7 thousand as S&P targets. So that means that even the banks that we know the biggest cheerleaders are now looking much lower. And to be honest, the fact that we haven't managed to put any type of rebound after the massacre we had the day before yesterday, should be quite worrying for the Fed. Now, and we're now back to the charts. On the other hand, we are still holding here in the S&P the 61.8% fib from the 2016 low, which, as you see here back in the chart, was an important support area, to the all-time high. So still quite an important support area. S&P and the rest of the indices look very, very heavy. There's no question about it. But I do understand why somebody would want to take a shot, from a risk-reward perspective for some type of rebound from here. Now, just very briefly, the Dow Jones has now erased all the gains it had since February 2017. And, the next downside support is 19,500. So, I really wanted to, I completely forgot to show that, along with other contrarian indicators we were showing here before everything imploded. Let me see if I can find it, because that was a lovely contrarian indicator. Barron's front page, Dow 30,000. There we go. You had seen this one, Dale, right?
Yeah. When was that? What month?
End of January.
Wow.
Dow 30,000, why stocks could vault past the milestone. That came along with that even better timed front page of The Economist, you remember, with the 2 trillion run of the FANGs. So yeah, that was a beautiful contrarian indicator as well. We were close to 30,000, and now after 3 weeks we are literally 10,000 points lower. Of course, and we had said that the index that has suffered the most, and the index, it was one of our indicators that things were not looking that great, was the Russell, because the Russell was the only index that had actually not rallied to new highs. So the all-time high in the Russell remains the summer 2018 high. And from that high to the lows, the Russell is actually 42% lower. 42% lower. Cut in half, almost. And I remind you that I kept saying here, listen, if the problems are exogenous to the US, as Trump and the whole administration was claiming, then why isn't the Russell overperforming? Because with exogenous problems, theoretically speaking, the globalized indices like the S&P, the Nasdaq, the Dow in a smaller extent, but still, should be overperforming the Russell and not the other way around. And that wasn't the case. The Russell was showing that something was not that rosy with the U.S. economy, because it's the vast majority of the stocks here are local businesses. I mean, they don't do much of exporting or whatever. And that was another, besides the huge divergences in the VIX, the fact that the Russell was diverging and wasn't following the rest of the indices to new all-time highs was another indicator that I kept saying again and again that we should pay attention to. Now, if we want to go to foreign stocks to the US and we go to the DAX, there's not much to say here. The DAX yesterday at the lows actually hit levels that we hadn't seen since September 2013. So bottom line, this index went from all-time highs to 7-year lows in a 3-week round trip. And it's now from the highs to the lows, almost 40% lower. Now, let me be very clear about it. Even on the way down, the US indices seem to be overperforming some of the European and foreign indices. They are falling a little bit less. I'm going to reiterate that my expectation is that this is not going to be the case for much longer. So we're still seeing US overperformance during this massacre. So it's not that somebody would be really like, happy owning US stocks. It's just a little bit less of a hit than owning the DAX, for example, if you own the S&P. Canadian, we just got Canadian CPI, by the way, 2.2% year on year versus 2.1 expected. So, just incrementally higher. We're going to go over to the USD CAD. I doubt that's going to make much of a difference. Now, one last index I wanted to show, because we have shown this on this show, and that is the Australian stock market. The Australian stock market, I was following closely this massive ascending channel. And guess what happened once we overshot that? That was the end of it. Australia, 33% lower from that high and that overthrow from this massive ascending channel to the lows. So as you see, that is why you shouldn't be in the wrong side of, bubble stock markets, because what looks like a beautiful paper profit can vanish within a few trading days, right? So, rather be conservative, buy when valuations actually make sense. Listen, those of you that have been listening in Phase for the past 3 years, some of you might think that I'm a perma bear. I'm not a perma bear. The problem is that since Phase was up, stocks were overvalued. So, I can't close my eyes and say, go ahead and buy these stupid valuations. And, you know that they're stupid valuations, because if the valuations were logical, yes, coronavirus has created a huge disruption in the market. There's no question about it. But if valuations were normal, you wouldn't have seen moves like this. Let me be very clear so you can put things in context. What do you think was a bigger hit to the economy? Coronavirus or World War II? Now, what if I told you that the Dow during the whole World War II, from the highs to the lows, dropped less than Dow has dropped during the first 3 weeks of the coronavirus incident? So what do you think makes the difference? The fact that coronavirus is a much bigger global event than World War II, or the fact that perhaps Dow was valued, much more logically when World War II started? The answer is obvious. So trust me, if valuations were normal, you would definitely have seen a hit. There's no question about it. But we wouldn't be 40% lower in some indices. We would be 20% lower, 15% lower, 25% lower, best case scenario, worst case scenario, to be exact. Anyhow, USD yen. There is a friend here asking if we actually covered USD yen while he wasn't here. No, we haven't. USD yen is still stalling at the 61.8% fib from this move lower. 200 daily moving average also capping here. So let me be very clear. First of all, I've said since some time ago, USD yen is not a place I would want to play risk off. And the reason is because it wasn't a place to play risk on, and it wasn't a place to play risk off for quite some time. It's more than obvious that the currency itself has a collar, in essence. I mean, there are forces that want to keep USD yen in check, both to the upside and to the downside. So I don't think it's a good proxy. So you can trade through it, whatever your outlook is for risk. So bottom line, I wouldn't advocate somebody really wasting much of a time trading USD yen in comparison to other stuff. But if you want to do so, I wouldn't be long USD yen as we're testing 61.8 and 200 DMA. Okay, so if I had to do something with it here, which I don't and I won't, I would be short. Okay, so that's my viewpoint about the USD yen. And having to do with the DXY, a massive rebound from this drop. Now retesting once again this previous channel's trend line resistance. So I would be a little bit careful here, because even a short-term pullback is a likely scenario. Now, do I believe dollar is going to turn lower and get destroyed from here? No, I think that's it. We're not there yet, because the market currently focuses more on running for safety, and many times running for safety means liquidating XYZ and getting yourself back to dollars, among other things, among liquidity issues and everything else. So I don't believe that the dollar is at the last part of the end game, in which I think it's going to collapse. That's my thesis in the medium to long term, and it's not going to change because it's based on fundamentals. At least my fundamental, the realization of fundamentals from my point of view. Okay, but I don't think that it's a good bet to be short the dollar as we speak, with the market having the concerns it is having. So we might see a pullback, and I wouldn't be surprised if after that we see another move to the upside towards 102. Okay. Having said that, as I've said many times, I don't like to trade the dollar to the long side, because in general, I don't like to have positions that go against even my long-term fundamental thesis. So I might buy the dollar against some specific pair. For example, I've said many times that USD CAD looked to me like a very appealing opportunity to be long the USD, and there was a very good technical reason. First of all, the Canadian economy is not in a much better shape. Second of all, it was more than clear to me that this formation here was a corrective formation. And once we broke through it, I expected that we're going to see a big move higher. Now, did I expect that the big move higher is going to be from 133 to 144 in a few days? No, I didn't. Let me be clear. If you remember, my target was 135.70, and above that, 136.50, and above that 138.58. I didn't expect that it's going to explode, in this manner. I did expect it's going to move higher, but nothing like this, to be to be fair. So, for example, against the Canadian, well, still looks good. I mean, I wouldn't be buying up here with the RSI being at 85, but a pullback, sure, pullback should be a buying opportunity. Okay. There was Ty says there was a divergence in S&P 500 monthly since 2018. Yeah, that was another type of a divergence. Thank you. We had mentioned that as well. I agree 100% with you. Grigori, you can't imagine. Invertly correlated. Yeah, I trade a lot less than I talk. I actually take few positions usually. So yeah, I'm quite disciplined with how much I trade. Yes. You have to learn from your mistakes. So, as a new trader many years ago, I caught myself over trading, and, I put a rule to myself that I would never do that. And I actually, now I can tell you that there are periods of time that I would probably be accused of under trading less than I should, not more than I should.
You started trading in grade school, correct? Elementary school?
I started trading at my first years of university, and as I've told you, even in the interview we had in FX Trade, I started actually trading.
I don't remember that one.
I actually started trading Betfair. Football markets, but right. It's actually the only betting place that is an actual market. So participants can take both the bid and the offer side. So it's an actual market that you can trade. The only difference with a stock market is that the market, every market that opens, lasts for a limited amount of time. As right. much as a football game lasts.
Yeah.
Yeah, exactly. Exactly. So I started trading there initially, and as I've told you, my uncle is, you know, a very, he's retired now, but you know, he was one very successful trader. He had, you know, traded for the biggest banks all over the globe, and you know, he saw that one day and he was like, oh, why are you wasting, you know, your talent and, you know, trading football? Why don't you go to the financial markets since you're studying finance anyhow? And I'm like, you know, I've never considered it. I'm doing this as a hobby because I actually like football. And he was like, trust me, you're going to enjoy that as well. So, you know, that's how I switched.
Okay, good story.
Yeah.
So you got hooked. You got
Yeah.
hooked on football, and your uncle showed you the perfect place for an action junkie.
Indeed. So let me go through some of the rest of the questions. As always, price rules. So watching price action into and out of cycle window for confirmation, says Ben. The best advice is to day trade what you see. I'm not a day trader usually, but I agree with you, and day trading does have huge advantages. There is no question about it. I mean, the fact that you can go to sleep and, you know, not have to wake up and worry about your position is definitely something worth noting. Nitty says 186 on EA. By EA, he means Euro Aussie. Great call, Blake, on funding, currency, and wind. Yeah, you know, Blake had even a better call, which was USDMXN. I mean, Blake's call in USDMXN when we were actually still trading below the triangle was amazing. As I said,
We're
USDMXN
in
has
a
exploded.
wedge. Yeah.
Yeah, has exploded higher, 30% in what, 18 trading days, 19 trading days, something like that. But speaking of EA, and since we haven't had a look at it in some time, just look at Euro Aussie. Euro Aussie was trading within this long-term ascending channel and it exploded above it. Same deal here with Euro Kiwi. Euro Kiwi trading within the symmetrical triangle exploded above it. EuroCAD trading within this long-term descending channel exploded above it. So as Nitis is saying here, all those carry trades got destroyed. And imagine this didn't even have much of a carry. Euronoc, same deal, exploded out of there. This, in my opinion, I've said that before. This is probably going to be one of the best shorting Euronoc and shorting USD NOC is probably going to be one of the best long-term trades once this type of non-stop appreciation ends, because fundamentally speaking, the Norwegian kroner is, you know, a much better currency than both the euro and USD. I mean, fundamentally speaking, the Norwegian economy is doing amazingly. So I will be buying tons and tons of Norwegian kroner at some point in the not so distant future. I'm going to let you know. Yeah, all of them got really unwound. Now, obviously, since we haven't had a look at them in some time, the same didn't apply that much in pound Aussie, pound Kiwi, etc., because we've also seen the pound weakening. And it's worth noting here that pound Aussie, for example, is, you know, other than spiking through that day, it hasn't managed to break through this ascending channel. Of course, it's still bullish. I mean, it's still in what is the definition of an uptrend, higher lows, right? But, you know, there is clearly a lack of momentum here. There is clearly a very big RSI divergence here. So I would be careful, because once these reverse, pound Aussie and pound Kiwi might suffer quite a lot. Pound Kiwi, to be specific, never even managed to break through this long-term channel. Speaking of which, this looks like a corrective move to me. So I wouldn't be surprised if, you know, later on we see something like that happening there. Anyhow, too early for that, and too early to try to be massively bid, to go massively bid currencies like the Aussie and the Kiwi, not as long as, you know, there's so many jitters. wanted to step in and just say if you're flat. Oh yeah, Pete's comment. Blake read that. We discussed this. Economic news, we covered those. Real property will be more viable than gold. Maybe price adjust on the back end. That was facilitated by Countrywide and BOFA. Might be the case, but in any case, I don't think somebody should discount the ability of gold to preserve, to store value for 5,000 years, and I don't think that's going to change today. So I still think that we can debate about it, but there is definitely place for gold in anybody's portfolio. Now, we can debate if you want that to be 10%, if you want that to be 20%, or if you want that to be 50% temporarily under such circumstances. But I think that every portfolio should own some.
Where do you keep yours? No, is it in a bank?
I'll take the fifth.
Okay.
I'll plead the fifth.
So
Okay.
do you believe that people should have physical possession of it?
I definitely think that people should have physical possession in it. And if you're asking me, I believe that you shouldn't put all your eggs in one basket.
One coffee can in the backyard? All right. So, Steve, again, I mean, thank you very much for this wrap up. These are stressful times.
Definitely.
So, you know, we have a guest today that I'm looking forward to talking to. He produced Kudlow's shows and Stuart Varney shows, and so, you know, financial kind of celebrity type people on CNBC and Fox, and he has his own blog and website. So I'm going to introduce Jake Novak to our community.
Perfect. Enjoy
Okay.
the interview.
All right. Thank you, Steve. All right, Jake, I see two of you. I'm going to get you set up. I hope I'm selecting the right clone.
I'm going to stop sharing.
And I'm pretty sure that okay. Now, that may have screwed me up, but let's see here. Panelists. Okay, Jake. Hi, Jake. How are you?
I'm fine. Can you hear me?
Yeah, I can hear you fine. And welcome to our community. Name of it is Face. And appreciate you being here during all these unsettling times. I'm assuming you don't have anything you want to show us, so I'm going to share my screen so people could see what you're doing now. So Jake, here's Jake's Twitter handle to be able to follow him in the future. And here is Jake's blog site. So Jake, you know, I read a little bit about your history, and you met a lot of interesting people in the financial field. So how did you end up at CNBC and Fox producing these shows? Was it a goal you had in mind, or was it possibly just, you know, something that, you know, man plans, God laughs, and it happened to you?
A little bit of that, but I think the best example best way to do this is just to go through how I got into the news business in the first place.
Okay.
You have to be honest with yourself, I think, when you get into careers and ask yourself who you really are. And I knew that if I got into any other kind of job, office job, field job, whatever, I would probably get in trouble and get fired for talking about the news all the time. So
you followed your heart.
That I should get into the news business. But I didn't want to be someone who was doing print as much, because I also very much value quicker and more direct and clearer communication. So television was something that I was very interested in, and I found out that Northwestern's graduate program in broadcast was only a year and was extremely hands-on, very little classroom work. They immediately sent you out into the field, and in fact, the last few months, you're a DC correspondent for a lower budget local news station. So it's a tremendous experience. It's still pretty much the same for if anyone listening has a child or a friend who might want to get into the business. I really recommend hands-on. And further than that, I started by doing local news in small markets. I was the producer of the ABC station in Bangor, Maine. Then I went to Decatur, Illinois. Then I went to Cleveland. Then I came back to New York, where I had spent my
Kind of like a
high school
stand-up
and college
comic,
years. So-
bounces
So what I
bounces
learned
around.
from local news is that there was tremendous lack, and general news, there was a tremendous lack of expertise. The people who you see on everything from your local news station all the way up to the major news anchors of the major networks, they're doing general news, unlike the panelists you just had on and things like that, their level of expertise is extremely low. And that is not to say that they are not intelligent people. It takes a certain level of intelligence to communicate well. But
Did
when
you
have
want
a
to be
different
behind
story
the
every
camera?
night, or even after a few weeks, you switch and change. Your potential for expertise is low. You kind of move from one thing to the next, and then you have the celebrity factor, especially at the network level, which I think also melts brains, if you know what I mean. So
Can you hear me?
I very much became interested in finding people within the journalism, television journalism, who were experts in something. And there's really only two places for that. That's financial news and sports news. In both of those fields, people cannot go on the air without having really good basic knowledge of what they're doing. And of course, CNBC is a great place for that. A lot of the people who are on CNBC, where I used to work full time, I'm still their editorial columnist contributor, but our former traders, people who used to work at a trading desk, people who used to work at some level of a major corporate hierarchy. And I think that is important. So that's how I became attracted to it. I wasn't one of those people who started trading in high school or did things like that. I was always interested in the markets, and I followed market news from a very young age. But I was never one of those people who wanted to do that full time. But when I looked for people who knew something about what they were talking about, and I wanted to work with people like that, I only had two choices. And sports is too much of a fun hobby for me. I never wanted to make that work. So financial news became where I became focused. After about 6 years of local news, I started doing that. I've been doing it for 20.
Okay. Can you hear me, Pete? Jake, can you hear me?
Yeah, I hear you.
Okay, because I was trying to talk
I'm sorry.
and make it a conversation.
No, go ahead. I'm sorry about that.
Oh, okay. So did you want to be behind the camera or in front of the camera?
Well, in the beginning, I didn't want to be in front of the camera because,
Why?
like I said, I was in the local news position where I didn't really think that the on-camera folks had much control over what was coming on the program. They were just kind of reading a teleprompter. So, but when I started getting more involved in financial news, I realized that I had more of a contributor type role. I don't know if I could be an anchor of a big show on prime time, even on CNBC or Fox Business, but I do now a lot of on-air contributing at a lot of networks. And of course, I have my regular columns at my online content.
Okay, so why don't we get to the topic at hand? I'm not, I know you're not a epidemiologist, but you had an opinion on what we should do with this corona crisis that we have, the virus being a crisis here behind the curve. You think that we need a timeout. So it looks like we're having a timeout forced upon us anyway. So do you think that we reacted too slowly to this here in America?
Well, I think that we spent too much time, and I can tell you this from the newsroom. So here I am, you're inside man, and what the newsrooms were talking about.
That's why I brought you on.
Starting from the beginning of the year.
Okay.
So I'm not going to pretend I was the first person to raise the alarm about coronavirus, but in my newsroom, I pretty much was, and I was pretty much shouted down by people who
I know what that's like.
And then the focus only became on, how is the coronavirus going to affect our supply chain from China? And that was pretty much the only focus. There was not a lot of discussion of what if this epidemic hits the United States and we start seeing a lot of illnesses here and maybe even death. That's, by the way, Dale, that's new. I mean, we've only heard that narrative in the news media for a couple of weeks now.
Yeah.
So
conventional media, but if you were digging, with now all the different social platforms that we have, there've been a lot of people on top of this that have been really ringing the alarm bell quite loudly for a while. So, I guess, John Q. Public, it's news, but a lot of people knew this was developing well before that. And let me ask you this, are people that your contacts and your network of people that you do your intelligence gathering believe that this could have happened to the markets anyway, and that the coronavirus was just the match that lit the fuse? Or are they saying it's almost 100% this is all corona?
Yeah, they're saying this is all black swan event corona stuff. And they might be wrong. Clearly when you have these kinds of events, it exposes all the ugliness and all the flaws in the markets overall and in the
Yeah.
economy overall. But the people I've spoken to have been week after week before this hit, surprised and making sure that they talked about it at least again on social media about some of the strengths in the economy here in the US that they had not expected. Some of the economists I speak to, there's not a lot of them who are willing to admit that the trade war with China, which they originally thought would be a total disaster, a lot of them are now willing to say, and not a lot of them, only one or two of them that I know are now willing to say, hey, we were wrong about that. It wasn't what we expected. And so that is a big pipeline for me. So yeah, they're focusing on Corona only. Although, listen, I don't discount the inherent weaknesses that we had in the economy that we were ignoring even before coronavirus. But I will say, I don't think it's fair to focus too much on that. We're clearly all in an all hands on deck situation with this. Although I will acknowledge that when we get past it, we certainly won't be problem free in the economy. That would make sense.
Okay, when do you believe we'll get past this from your sources?
Well, that is interesting because the answer to that question is actually not an economic, or sadly, it may not even be a scientific answer to your question. I think that there's going to be a political answer to your question. Here's why I say that. No matter how serious the spread is, if we don't see widespread death, and I certainly hope we don't, I hope we don't see anything along the lines of the percentage of deaths that we're seeing in Italy, for example, or Iran. If we don't see that, Dale, I cannot politically, I don't think that there's going to be a political platform or any political strength for our leaders in this country to continue to virtually shut down the economy and keep people in their homes. People are going to revolt against this if they don't see widespread death, which of course we don't want to have happen. So to me, I think we're dealing with probably the month of May. It's going to get really, really difficult to impose this kind of shutdown on our economy and quarantines and everything else like that for another longer than another 5 or 6 weeks. It's going to be untenable, no matter how much stimulus or bailouts or whatever the federal government brings. I'm just talking about from a political and a cultural standpoint, which if you really study our economy, you can't ignore those factors. So I don't think we're going to be able to get into the month of May like this, even if the spread continues. The only way that continues is if, God forbid, we see widespread death, then of course people will stay in and they won't revolt. But if we don't see thousands of deaths, which again we're all hoping we don't see, I can't see this going past into the month of May.
Okay, and going past the month of May, with this going on, we have an election coming up here, Jake. I'm interested in what your thoughts are. For example, if, say, for example, they dampen down, we have a little reprieve, kind of like what happened 100 years ago. The first year of the Spanish flu was bad enough to stop World War I. People were too sick to kill each other. But they came out on Armistice Day and thought we had an all clear. And it was really the second wave of the Spanish flu that was much more devastating. So, are you hearing that this could be a reality that's with us, that, it's going to cycle and reemerge? I know a lot of people are worried about now that China's numbers are coming down and they're sending people back out to work, that there could be a reemergence of this virus in China.
Yeah, it's one of the many fears. And that's one of the reasons why in my previous answer, I pointed out the stir crazy factor. We might get even better evidence or more solid evidence that there could be a resurgence of this. And yet, until people see it, they're not going to comply for much longer. I just cannot see the people of this country with their kids at home. That is a major factor that enough people aren't talking about. I don't see them complying, and then that's a huge danger. This is something for the public health officials that they're going to have to tackle and deal with. Now, what they tried in Britain. They tried to say, look, let's just quarantine the elderly population and people who have emphysema or other respiratory problems and see if that works. And that didn't work, and it wasn't because of the public health problems with that. It didn't work because politically it didn't work. With news every day of higher and higher infections, there was no way the political leaders could continue that policy. And I think that, to me, this is where politics and public health and science all kind of converge and start to fight each other. And your 1919 example is a good example of that. My grandfather almost died from that in 1919. By the way. They thought he was a goner. So
Mm.
I am of a strong opinion here that if you're an investor, you're looking at these markets and you're not considering the political ramifications of any policy, no matter how sane it may seem from an economic or public health point of view, you're going in a little bit blind. You have to realize that no matter how popular or unpopular a president is, or your governor is, or your local leaders are, their ability to maintain a shutdown or a quarantine, even with the best of scientific evidence, continues to erode day by day.
Okay, because even in Italy, it's one thing to have a lockdown, and for example, what's going on in San Francisco, stay at home. There's still a lot of people that are going out. In fact, there are examples of people that have tested positive in Europe that still go out, and it takes actually police or National Guard to enforce something like that. Do you think we could end up having National Guard? And what I'm most concerned about is how do we have a national election, which is only about 6 months away, 5 months away, under these circumstances? For example, it was in Ohio that they postponed the primary. Do you think that there's going to be a problem with having an election? And could it be a problem with the president who, when things don't work, says it's rigged and it's a hoax, and the legitimacy of this election would be easier to call into question because of, say, for example, people being afraid to go wait in line at the polls this fall?
Yeah, it's going to hit that critical mass well before election day. November is
a lifetime away. It's a lifetime away now, isn't it?
7+ months away. We're pretty much almost 8 months away, a little less than 8 months away from election. We're going to hit critical mass on things. I mean, if there's any way to couch it, that's actually some good news, right? Because the fact is, if we were all under a compliant shutdown and everyone was quarantining, and then suddenly the election came around and then we had this huge deadline, that would be the first test. That would be a really rough first test. But like I said, I think the first test is going to come within a few weeks when the nation starts to revolt against an economy that's shut down and being forced to stay at home and not be able to go out and their kids home from school. But so that is a scenario that I think, if there's any silver lining, I don't think we're going to get all the way to November before this is tested, before the fact that people start going out and saying, hey, I'm not going to keep staying in a quarantine here. I show no symptoms and hardly anyone is dying from this. So if there's any silver lining,
the mortality rate's going to be the key to this whole thing over the next month.
Yeah, I really think so. And not only the mortality rate, but who is dying. Now, there's been a lot written in the last couple of days about how callous some people have been sounding about our elderly population. People saying, well, if it's only the elderly, I don't care.
Yeah, it's only.
I know that's a sick sentiment, and I don't want to hear that. But the truth is, if young people start dying in a bigger number than they currently are, that is going to have a much bigger political impact, right? I mean,
yeah, because they have a lifetime of tax paying ahead of them, where the elderly are only, just living off the system. That's the way the millennials look at it, right?
That's the way they look at it. And look, elderly Americans, from a statistical point of view, are statistically the wealthiest people in the world. That doesn't mean elderly people are all rich. It's just that there's a tremendous amount of wealth concentrated there. So that's another reason for some of the resentment. There's a difference between jealousy and resentment. I've written about it. Jealousy is actually a good thing. It can really motivate people to do things, to want to try to be like the person who has the things that they would like to have. Resentment, though, is a different thing. Resentment doesn't breed as much action. Resentment just breeds resentment. I think that Bernie Sanders is a great example of that. He really stokes resentment. And then you see the proof is in the pudding. Did people actually come out and do something and vote for the man? No. These young people who really are the basis of Bernie Sanders' campaign, who I think are a lot of the same people who may be callous towards the elderly right now, even though they're supporting an elderly guy in Bernie, haven't shown up Dale at the polls in these primaries. It's incredibly instructive.
Why? Why haven't they?
Well, the easiest answer to that question is that they never do. The exception proves the rule. There was a big turnout of young voters in 2008 for Barack Obama. And since then, it's gone right back down to the levels that we usually see. Only about a quarter of 18 to 25-year-olds ever actually vote. That's usually the number. Like I said, it spiked in 2008 for Barack Obama, and then it's gone right back down. And there's a lot of reasons for that. I think the biggest reason is what you were talking about. Young people don't see their role in they don't have a maybe they don't have as much. They don't have a business. They're less likely to have a job. So when they go and vote and they see a result of an election, they don't see it making much of a difference for them one way or the other. Which is the reason why all alienated voters don't vote. Voter alienation, when you stretch it beyond just young people, the answer they'll usually give is, "Oh, there's no difference in my life whether I voted or not. These people are going to screw me one way or the other, or they're not, and that's it." For years, they taught us in school that it was voter apathy, that no one was paying attention, and I always thought they were discounting and lowballing the number of actually alienated voters. And I think there's some alienation among young people in addition to that apathy, and that's the biggest reason.
Interesting. Yeah. So, even baby boomers have had that experience of, watching, their people don't realize it, but their baby boomers, the Great Recession wasn't so great to, and never recovered,
Yeah.
and feel that type of alienation as well. So maybe it's resentment is the strongest emotion in our country right now. But what you're saying is that people want a healer and a peacemaker, and that's the way they see Joe Biden.
Well, that's another thing that you have to always remember. And one of the things that was very humbling for me, I went into 2016 like so many other people, thinking that Donald Trump doesn't have a chance, and just kind of a ridiculous candidacy. And then in March, it just hit me that the man was going to win. And it took me a little while to publish that column for CNBC, but I did. I wrote it in May. We published it, I guess, on the last day of May, saying that Trump was going to win. And then from May until November, my bosses kept asking me, "Do you want to revisit that? Do you want to say he's not going to win?" And so, in other words, I had to write that column about 6 times, because every time something that bad would presumably happen to Trump's campaign, I would have to write a new column saying, "No, I still think he's going to win." And what was humbling about it was that I still thought, like a lot of people, that campaigns were about ideas,
Yeah.
and that even if there was a candidate who was a little bit shallow, if he or she had the right sloganeering and maybe was on the right side of a particular issue, then they would win. But what I realized now,
Jake, it's very interesting, with your background and shows you produced. Actually, someone you produced a show for, Larry Kudlow, who I interviewed during the 2016 primaries. I asked Larry if he thought Donald Trump had a chance to win the nomination, and he said no, and I really don't agree with many of his policies. Now look.
yeah.
So,
And it's one of the
okay,
reasons
so
why,
the
I was working on a show with him, and he decided, he ended
Yeah.
up going to the White House.
I could do this for you. I made him feel at home. Booyah.
Yeah.
Okay, so go ahead, Jake.
Yeah, he had a change of. Even the day before the election, he wasn't sure he was going to win, and I was just convinced from March on. And that doesn't make me a prophet. There were people who
Okay.
had it.
Well, I'm going to give you a
before I
chance. I'm going to give you a chance to be Nostra Novak.
did.
Who's going to win this fall?
Well, obviously, the coronavirus has thrown a tremendous wrench into everything. But what I am not seeing from people who think, "Oh, Joe Biden will clearly be the winner in all of this," because of the fact that we're probably going into a deep recession, at least for a short period. We're probably going to see a tremendous anger about coronavirus, whether it's President Trump's fault or not. But again, that's the humbling aspect of this. Remember that people still vote for the most persuasive candidate. And I am not at all convinced that the voting public in this country, or even the Democratic voters, have any confidence or really are connected to Joe Biden. The only reason why he's winning in the primaries now is that the Democratic Party establishment cleared out his most serious competition. They did a very good job of frightening any of the potential older voters who might vote for Bernie Sanders. And Joe Biden has never proven on his own, outside of the tiny state of Delaware, that he can convince a critical mass of voters to go with him. He turns people off the more you see of him, which is why they're trying to keep him under wraps. It's something I advise them to do. I don't do any advice because I root for any candidates. I just like to do campaign analysis, and I wrote a column about that a few weeks ago, about how Biden wants to hold on to this nomination. He had to go into relative hiding. So honestly, as the country gets more and more worried and frightened and angry about the coronavirus, I don't know if Joe Biden's going to be the recipient of the benefits of this, which might lead to the Democrats rejiggering again and going with somebody else. Not going to be Bernie. So the answer is, I'm not even sure we even have all of our candidates in place right now, and we are in this coronavirus shutdown. But gun to my head, I still think that President Trump has a tremendous advantage here because of this. This is the reason. Because if he continues along the messaging that he's had for the last couple of days and starts to get a little bit more of a leadership role, there will be some people who say, like, look, we don't have any choice. You know, George W. Bush was not a popular candidate among the public in general, but he had the blessing of running against an Al Gore who was completely unpersuasive and boring, and a John Kerry who was unpersuasive and unlikable. And Donald Trump may be a similar recipient of that. So right now, because he has the chance to be a more persuasive and more leadership and project more leadership in this crisis, I think that he has still, it's still his salute. It's still President Trump. It still has the best chance to win. Because I don't think Joe Biden, even under the worst of circumstances, can engender confidence.
Okay. Interesting call. Why don't we wrap it with an area of the world that you have great interest in, and that's Israel. So with what's happening here, there has been some escalation and some missiles and people moving around our military in Iraq. Do you have some concerns that while everyone's attention is diverted to the coronavirus, that bad actors will make moves when people or nations are in weaker positions and when they're in stronger?
Well, here's my biggest concern, and it comes from what I think is generally a positive development. Right, you had two major funders of terrorism and military action against Israel over the last 40 years. And that was Iran and Saudi Arabia. Now, for the last 3-4 years, Saudi Arabia's window has been closed to funding of terrorism against Israel. They closed that window for a number of reasons. The biggest
Mainly
reason is
oil.
that they were more worried about Iran and they want that partnership with Israel, the de facto partnership with Israel, to continue. Now, if that left Iran, which was a good and bad news story, Iran, that's one less funder, so it was only Iran now funding it, and that was great. The problem is Iran is much more belligerent than Saudi Arabia ever was, even in its worst days. Even when Saudi Arabia was its most belligerent towards Israel, it was never anything like the way Iran is. Now, Iran is very much on its back right now, but not only from coronavirus, but the killing of Soleimani by the United States, which was a very, very positive move for the whole world, was very positive for Israel as well, because Soleimani made it his life's work to continue a lot of mayhem all over the world, especially against Israel. Now, of course, they're hit with the coronavirus. But, I've been doing this long enough to know that whenever there's a vacuum, someone is going to fill it. So I am worried about who is going to fill this vacuum if Iran continues to deteriorate and their situation deteriorates both financially and health-wise. Will it be ISIS? Will it be will another terrorist group come into the fray here, and that's even worse than Iran? That is a big concern right now. But what is good is that I think right now, Israel right now is handling the coronavirus. And again, economically, it's going to be a disaster for them just as much as anyone else, if not worse. But from a
they locked down the country, didn't they? Lock down the country.
I mean, they're getting close to that. They have not yet said everyone has to stay home, but they're getting. But there's the Nobel laureate Michael Levitt, who's been really studying this very, very closely, just predicted this morning that Israel will only have 10 deaths from the coronavirus. Now, even God forbid if he's off by a factor of 10, we're talking about 100 deaths. So it's not that to me is a good sign. Remember, Israel has a very large elderly population, and there's a lot of close congregating both in the army and in some of their yeshivas and their religious academies. So the chances of this spreading to an elderly population are pretty large, but at the same time, there's a lot of vigilance there. So but economically, this is a disaster because Israel's tourism industry, which has always been a vital industry, has become even more vital because it's been growing like crazy. For the last 5-6 years, Israel's tourist numbers have been exploding. And guess where most of that explosion has been coming from? Asia. They've been getting a tremendous amount of Asian visitors. It's surprising because these are not Christian and not Jewish visitors who tend to come to Israel. So from an economic standpoint, I think this is a disaster. From a public health standpoint, Israel may be a beacon of light to others. Let's hope leads to a turnaround for the economy at some point.
You know, I just want to ask you one more question. Tell me what you think, Jake. You know, every time I look at this coronavirus map and all the red dots and blotches all over the globe, how come I don't see any red dots in Russia?
I think the answer is twofold. One is they're probably not telling the truth and not really telling us about it. But also, it just goes to show how not mobile that population is. They don't have the kind of social interaction. They don't have that kind of tourism that other countries deal with. For years we've been saying that Russia's economy is about the size of Italy and it's a one-trick pony with oil. And I think we're learning that. I mean, this is why these I think that globalism has its pros and cons. I'm not 100% in favor of it. I'm not 100% against it. But Russia is a good example of how globalism is not really happening everywhere, right? Russia doesn't have a real. I mean, they're politically a globalist country. They have their dance at every wedding all over the world. They try to play off different political disputes everywhere, and they cause problems everywhere. This is not just they don't just, by the way, they don't just meddle in the U.S. elections, although I don't think their meddling has much of an effect. But they meddle everywhere, and they always have it. They did it under the time of the czars too. This predates even the USSR. But to me, this just goes to show how isolated the people in the country is, how economically non-diversified that country is. And they've gone from the czar to the USSR to Putin. They have yet to have decent economic leadership in that country since ancient times, and it's such a shame.
You know what's great about you, Jake? I can ask you anything.
I hope so.
So it really was a pleasure meeting you and getting your views. And I'd like to do this again with you as things unfold here in America. And it was really a pleasure meeting you. Thank you for your time today, Jake.
Thank you. Hopefully next time under better circumstances.
All right, buddy. So everyone, that's Jake Novak, and you can follow his writings and what he's thinking at jakenovaknews.com and on Twitter. And everyone stay healthy. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks again, Jake Novak.